Trading Pro today. We're obviously going to cover Plug Power stock and the breakout that it had yesterday and the trade management of the position, as well as our initial profit target. But I want to start out with the market and the stock market that is confusing quite a few people right now. And I just want to briefly go over a email that I wrote out to our community today, and I want to go over it before. We're going to get into the list of stocks to trade today, but I think this is one of the biggest things I want to talk about. Broad-based rally, obviously, yesterday. Most sectors took off. We have an open swing trade in Facebook. I want to talk about that in a second. But this is really the big thing I want to talk about is the fact that you need to be doing your game planning right now. You need to be doing your research. You need to be coming into the market prepared, because this is not the market. This is not a stock market right now where everything is just falling out of the sky and saying, buy me, buy me, buy me, because we're going up. So a lot of people are getting caught right now with a bigger macroeconomic picture on the stock market, which is the reason why we do these stock market lives every day, is to make sure that we have a really firm grip on following what we see as opposed to trying to forecast what we expect. So we came up with this little quote here today, actually. If you're following the tape, you're in good shape. And that simply means don't guess, don't forecast, don't predict. And I think probably the most significant part is this. If you're guessing a top from a macroeconomic picture, you're frustrated right now. And it's so expensive to try and force your opinion on the market to be right if what you're doing in the market right now is not matching what's going on in the bigger picture, what's actually unfolding in the market. It's just smarter right now for you to be in cash until you start to see what you expect to have happen. Otherwise, you're going to end up trading angry, and the stock market is going to make you pay for it. There's really no other way to put it. So the other part I want to talk about here is a couple of different stocks that broke out yesterday and putting them in context. We're going to talk about Plug and the other electric vehicle charging stocks. We're going to talk about Tesla, which exploded. We talked about XPEV yesterday and the upside. But I think this is one of the more important things here as well, which is the type of profit targets that you're setting in the current market conditions, because the market is less than perfect. And I'll get into what that means in a second. Despite the fact that we have some bullish order flow over the last couple of weeks, I'm still in what we might call momentum mode. We've been calling it cash flow mode for my stock trades right now, which means I'm scaling out into momentum, trailing the balance to the low of the previous completed candlestick. We get a lot of questions from new members into our community asking about profit taking and what's the right way to do it. And it really comes down to different types of market conditions require different profit management. Every trade is not the same. You probably heard us say it over and over again that you need to understand the expectation for follow through in order to understand what is the right risk and what is the right reward. So the challenge that a lot of people are having right now is the bigger picture coming down after the new year started with the uncertainty around the Fed raising interest rates. Well, they finally did, and we've been in a rocket ship since then. So we have long-term, and again, this is where it's relative, long-term bearish move since the start of January. But here's the thing, and this is really where traders get into trouble, is not understanding that we are technically well bid on the monthly chart, and we're almost well bid again now. So we had 2 months of selling into March, which was positive. It doesn't matter why it rallied. We know it was the Fed. We know it was the uncertainty leaving the market, but we went well bid. We had higher lows, higher highs, and we're near March's high again. So setting up the week and setting up the month really comes down to understanding right now we are bullish, short-term bullish, but you also still need to know when and if that price action changes so that your expectation can change. And right now that really means that we're watching like a hawk where we are, because a lot of people talked about window dressing and the fact that portfolio managers would not be selling until the quarter was over, which was last Friday, was the first. So we got some selling into the end of the quarter, but then buying stepped right back in. It's interesting that it's so obvious what to look at, but sometimes we have this emotional attachment to what we plan to do. So the way I'm looking at it, the way I'm looking at the tape, am I expecting us to head back up to all-time highs? Probably not, but until I see something else, which I just laid out for you, I'm still looking to be a buyer until that changes. And that, look, quite honestly, that could happen today, but we start out with the big picture and then we work our way down to the entry timeframes, whether it's a day trade or a swing trade, and we make decisions. Is today in harmony with what we're looking at in the bigger picture? So if we take that over to Plug, plug stock and the opportunity to be buying plug stock and looking at this trade right here. Obviously we've been talking about it's been having a really hard time getting through this 29 level. Finally burst through there with what we would call an energy candlestick or a fuel candlestick. Really, an energy candlestick is a large bodied candlestick. A fuel candlestick is one that also has large volume, and you can see it looks like it's set to open neutral right now. So what is the trade here? We got minor resistance here, and then we have all the way back up in the 40s. So if you did not buy yesterday, the trade for me right now, knowing that the resistance is up here, not that far away, just under 37, you have two choices now. Do you trade yesterday's candle looking for 37, or do you look for a bigger move, trading yesterday's candle as your initial entry, and then ultimately looking for a run up into the 40s here, which is right around this area here? Neither one of them is wrong. You could actually make a shorter term trade looking for 37, but then you can't risk yesterday's candle, which is $3, looking for a $6 move. That's a 2-to-1, maybe even a little bit less than 2-to-1, which is okay. But do you want to risk 2-to-1 versus 3-to-1? If you're risking 2-to-1, so in other words, you're looking to risk yesterday's candle to make $6, to make $6, that's okay. You just have to ask yourself, am I willing to risk the largest candle that the stock has done recently? There's nothing wrong with that. And this is actually a big part of what we talked about on last night's coaching call. Once you know your objective, once you know the initial profit target, then it really comes down to what is the right risk for the profit that you're going out and hunting. So there's two different trades here. We talk about this quite often. It's a two-step trade. You either are trading here to here, or you're trading here to here, which means that the risk is going to be different for the profit target that you're going after. Neither one is wrong. I'd be a little bit more inclined to be looking for the bigger move because the group is also strong, which we'll take a look at that now as well. Some of these other stocks are breaking out in the same area. Plus, we have the larger stocks that are fueling this, no pun intended. Tesla, even XPEV and NEO popped yesterday. We have what we would call industry group support. Now, because this industry group specific area is showing bullish price action over time, which you could see basically for the last 2 months, going all the way back to this move to the upside starting in February, that would lead me to be looking for a little bit bigger move than just this one. I'd be looking for that one. So this entry would be an initial position looking to add when we get to this place, not looking to exit, looking for that move, which means that this breakout and the entry today, my stop loss would be down here below this candlestick. So that's how I'd be managing that position from start to finish. Now, the other part of the trade here is obviously looking to see, is there a dominant force in the market right now that we could lean into and start finding some other good opportunities outside of plug stock? We give you this every day. This is something that we do a little bit of research on. This is a part of the research that I do every night. So you want to come in here and sort. Obviously, you could take a look at some of the stocks that meet the top 10 and the perfect criteria in order flow over multiple timeframes. But you want to dig a little bit deeper because you want to have conviction. So when you start to sort this list, other ideas now come out where there's a dominant sector or two that you can go in and look for ideas. So right now, technology stocks, but more specifically, consumer services are waking up. So Twitter, SE, Twilio, Snap, Spotify, FB, Meta Platforms, this group of stocks that has kind of been dormant for a while are now starting to find a bid. Obviously, Twitter yesterday off of the Elon Musk news exploded. We're seeing today if it follows through. FB, if you remember about a week and a half ago, this pause when it did not pull back, we identified that as new buying as opposed to being a short covering rally. Short covering goes up and usually pulls back down, and you only need to go right here to see that. So we actually rallied hard and pulled back down. This one rallied higher and went sideways. So we initiated a trade in here around the 218 level when we broke out of this. Yesterday, we were looking for FB Meta Platforms to give it one more shot to see if it can get through the 50-period moving average. It did. So we're looking for maybe a day or two right back up to where it gapped down. So this is how sector rotation plays into what many would consider the best stocks to buy now. We're focusing on where the order flow is going now, and we're simply piggybacking them once we understand how to track them. So going into today, technology, and you can see some other technology stocks that we haven't looked at in a while, such as Net, Oracle, even DocuSign have shown some signs of life. And net actually broke out of this really clean quadruple top here, pulled out, paused, pulled back, and showing a rally or the start of a new move back to the upside. Very, very similar price action in Oracle. And we've also been mentioning the solar stocks, and ENPH has been in that list for a while. A list of stocks that has not been in our radar, which is the energy stocks, which have just really kind of lost their mojo. If you're a regular viewer of the channel, you know that these are melted candles where they open and close in basically the same spot. And probably the big dog in this sector, the big stock in this sector that has shown the biggest moves since the group started to take off is Chevron, CVX. But you can see here clearly not much energy over the last 3 weeks. As a matter of fact, a bearish gap, one big day, and the rest of it's been indecision. Now, what's interesting about this today, we just built the argument that there hasn't been a lot to do here, is that we've now paused for 5 days. So I am looking for what we might call an expansion in volatility in Chevron today, where I'm looking for a big candlestick to break out of this 5-day pause. And right now it's looked like it's opening neutral. But the 5-day high here, we're basically looking for it to get above 166. So you can see it's got a little bit of work to do here. Because the longer time frame is still bullish, there's bullish order flow in Chevron stock, I'm only looking to be a buyer. So this 5-day consolidation has me looking for this to happen over the next few days. If we get it and get above 166, I'm going to look to participate. If this volatility and this lack of movement in this stock breaks to the downside, I'm just simply going to let it go. And that's a part of game planning. If it goes up in the direction of the bullish order flow, I'm going to take advantage of it over 166. If this neutrality actually ends up seeing selling as prices go down, I'm just going to leave it alone. It doesn't match my model. So that's the game plan for today. Those are the stocks I'm going to keep an eye on. So you might want to take a screenshot of this so you can have a little bit of a better idea of some of the stocks that meet the perfect criteria. And if you have any follow-up comments about this, definitely leave it below the video. I'll be sure to get back to you as soon as I can. Thanks so much. Really appreciate it.